cuts now of just close to 1% or so. You know, on the earnings front, Swiggy was something that we were looking at very closely this morning, and it has had a widening of its losses, and that is reflected in the stock price as well. It's down about 6.4% at very close to the low point of the day. The fortunes are quite different from Eternal, where there has been a beat across all metrics. The question is, can it be replicated? Is there a bull case for Swiggy? That question is going to be answered by my colleague, Mahima Vajrajani. She's joining with the bull and bear case for Swiggy. Mahima?
Yeah, I think let's look at the bull versus bear case to actually find out whether there's a bull case or not, and whether it's strong enough or not, right? So for Swiggy, overall, if we take a look at how the verticals have performed, food delivery continues to be a steady growth for them. Overall, they've been able to scale up good in terms of where the food delivery business stands, but quick commerce is where the real concern is, because overall, quick commerce losses have widened further, where one side they plan to achieve EBITDA break-even in Q1 FY27, widening of losses for quick commerce is something that's worrying a lot of investors right now, and that's why we're seeing the pressure on the counter as well. In terms of the food delivery growth side, I think this is something that Swiggy definitely has, excelled in, which Zomato couldn't do, and this is Bolt and 99 Store, which now contributes almost 20% of their overall food delivery growth, which was earlier, just 2 quarters ago, at that 10% is now 20%, and also one of the reasons as to why cash burn for them is higher, because this requires a lot of cash burn to scale up this business. Secondly, on the flip side, brokerages have kind of cut their target prices because of the concern that they have said that they'll achieve EBITDA break-even by Q1 FY27, but when they were asked in the con call, they were not able to justify as to how they will get there in the next 2 quarters. Moving on to the next bull versus bear case, food delivery contribution margins have expanded, so that's a good part. But overall, if you take a look at the Instamart business, orders per day per store has gone down by 8%, which Zomato has seen a growth of 3%. So quick commerce is where the entire worry is, and they'll have to figure out as to how they scale up this business where competition is actually very intense. They've reiterated their guidance for food delivery at that 18 to 20% YOY growth, and at that upper end of 20% is what they plan to do. Confident of that for sure. But for something like Instamart, the take rates have come down. This was a seasonal shift as well, but they'll have to figure out as to how the quick commerce take rates improve from here on. So I think this is the overall view of the bull versus bear case. I think if Swiggy goes ahead and figures out the quick commerce business well, that's where the growth is going to come and kick in from here on, which Eternal has done fairly well. And I think that is where, that is when investors will actually get in confidence of getting to that break-even point.